Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for July 17, 2022. Well, you wanted it, you got it. I know some of you are trying to enjoy your summer holidays, but volatility is upon us. It's been extremely volatile in the currency markets. It's going to be extremely volatile going into next week. So there's no better place to be than right here on the week ahead video. So let's get to it. Let's talk about what had transpired over the course of the last couple of weeks since I was not with you last weekend. But let's also talk about what's going to be happening this next week, because we have a very important week coming up. There's a lot of central bank activity. There is also CPI data coming out from a couple different countries, a lot of important data. And also we're looking at the Nord Stream pipeline, trying to figure out if that is going to get turned on sometime throughout the course of this next week. So a lot to cover today. But let's start. We're going to actually jump over to the euro dollar, and let's talk about the importance of this move that we've seen for the last 2 weeks. So when I was last with you 2 weeks ago, we had identified a bearish wedge. I was hoping it wouldn't break down since I was playing the euro on the long side at that time. I got stopped out as it broke down. I figured that could possibly happen because it was a bearish wedge. Well, once it broke down, over the last 2 weeks, we've found some pretty important support this week. A lot of people are wondering if the dollar has made a top. And we're going to talk about that because, first and foremost, when the euro reversed on Thursday and hit the low of 99.60, we were talking about it on the Forex Analytics shows. We talked about it on the F.A.C.E show. We talked about it on the Morning Edge, how important support would be at 9960. That was a 261% extension of the last move higher. It was low enough to trigger all the stops below parity, and then it caused a reversal where we got a false breakdown. Obviously on Friday, after the retail sales data and the University of Michigan sentiment numbers were released, the dollar extended its losses, the euro continued to rally. So the question is, has the dollar put in a high? I think it's not as easy as some of you are making it out to be, because we have to take a look at how important of levels have been hit on other currencies. Also, we need to take into account what's happening next week. Next week, on the 21st, we have the European Central Bank rate decision. The market is expecting the ECB to raise rates a paltry 0.25% or 25 basis points. Now, that's probably what they're going to do. However, at the same time, we should be getting word if Gazprom is going to turn back on Nord Stream, and that a lot of people expect is going to be a binary event, meaning they turn it on, the euro goes higher. They continue to restrict the amount of gas coming through at limited production, the euro is going to fall. I hear what everybody's saying, and I think those are the risks, and that's why we do need to pay attention to that. However, if the ECB only raises by 0.25%, we have to anticipate that if that happens and Gazprom turns back on Nord Stream, that the euro could rally substantially, as people would expect that the ECB may become more hawkish as they want to play catch up with the Fed and other central banks that are raising rates more aggressively, like the Bank of Canada this last week. So if that is the case, you have to be a buyer of the euro, and that would signal a significant high in the dollar index. So what I'm going to be looking for this next week in the dollar index is I'm going to be looking at this support right here at 107.50, 107.40 in the dollar index. If we break below that level, that is going to suggest that an important high was reached. But take a look at the other currencies in the market. Let's take a look at the sterling. The sterling is showing a descending wedge. By definition, it's a bearish trend. However, it's a reversal pattern setup. We pivoted off the long-term 88% retracement, and the sterling might be ready for a reversal. Let's take a look at the Kiwi, the New Zealand dollar. And by the way, New Zealand this week has their statement of intent this week. I don't know if that's going to be a market mover, but what I think is going to happen here is we are seeing a big reversal out of this wedge, and that may suggest a move back to the 50 DMA. You got the Aussie dollar that stalled at the 50% retracement, long-term Fibonacci retracement. Now, if you've seen these shows before, this week ahead video, you know that I'm looking for a long-term inverted head and shoulder pattern in the Aussie. And, you know, it's going to be really important, in my opinion, if we can rally back above the 69-cent level roughly. If we get back above 69 cents, that could signal a big reversal. That's going to be right around here. You know, 68.50, 69 cents, somewhere around right around here is going to suggest a big reversal in the Aussie dollar. Then also take a look at the Canadian. The dollar CAD, following the Bank of Canada, they raised rates more aggressively than the market had anticipated. However, the Bank of Canada front-loaded those rate hikes, so the dollar Canadian did a false breakout above the highs, then a reversal. That might suggest a high has been put in the dollar Canadian. Dollar Mexican peso, big reversal off of close to the 618 retracement. Also, if you take a look at the US dollar Swiss franc, another reversal off the 618 retracement. So pretty big reversals here, but it's not just the dollar. But we will be paying attention to the dollar. But how else are we going to confirm that the dollar has put in a significant high? Well, let's take a look at gold. Gold actually just hit the 127% extension of this massive move higher that we saw earlier this year. We hit the 127% extension, and the daily RSI is extremely oversold. That may be suggesting that precious metals like gold are finding some sort of support, but that's not just it either. Let's take a look at silver. Silver, massive move happened in silver this week, but notice where we stopped. If you take the spike low post-COVID lows to these highs, that was a 618 Fibonacci retracement that silver is finding support at around the 1850, 1870 level, depends on what CFD or spot price you're looking at. And then take a look at crude oil. Crude oil also had a major hold of the 200-day moving average after a false breakdown. So if you're looking at some commodities like like gold, like silver, like crude, and then you take a look at the rest of the dollar complex, you look at across the FX spectrum on dollar pairs, it really suggests to me that a very significant high was posted in the dollar. But we're going to need confirmation on Thursday that the ECB, or excuse me, that the Nord Stream gas pipeline is going to be turned back on. I think if we get that included with a, ECB that might be a little bit more, they might be near-term dovish with a 25 basis point hike, but maybe with the anticipation they might be more hawkish in the future with the pipeline being turned on. I think a major dollar high has been put in. But let's also take a look at equities, and I'm going to take a look at two other things. Actually, we're going to take a look at the S&P. Okay. And notice how the S&P is holding channel support. We've discussed this channel support for a while, even though we have a long-term, channel moving lower. I would not be surprised if near term we see the stock market rally back towards maybe this 4,000, 4,100 level, somewhere around here, near term. That looks like where the stock market may go. And if the stock market moves higher like that over the course of the next couple of weeks, that would also confirm that a major high has been put in with the dollar index. But before I move on to the last thing that I am looking at, I need to mention this. If you haven't tried out Forex Analytics, make sure you do so. It's only $1 for 10 days. Try us out. This way you can be involved in one of the most active trading communities in the currency market, in the markets in general. And then also, if you haven't checked out the Trader Funding Program, make sure you do that as well. If you want to learn how to trade our money and not take any of the risk, but capture 75% of the gains, if you can pass an assessment, you can do that. So go ahead and check out this 2-minute explainer video down below. and that'll give you a good understanding of what the trader funding program is. All right, let's get back to the last thing that I was looking at in the markets. I really want you all to pay attention to what's happening in the Bitcoin market. The reason why is because not just Bitcoin, but if you take a look at Bitcoin or Ethereum, which I don't have Ethereum on my list, but I'll take a look at it here in a second. You'll notice that we've been holding some pretty key levels of support. Now, this has been a bearish consolidation. And overall, even though I think Bitcoin is moving lower in time, we've been consolidating at these levels for a while. And if Bitcoin can make a move back up towards the 200-day moving average, which would be way up here around 3,000, or excuse me, I'm sorry, 34, 35,000, or even if Bitcoin can make a move back to 25,000, that would suggest that we're going to see some quote unquote risk on. And if we see some risk on, that means that the dollar again might tell us that a high is in. And let's take a look at Ethereum as well, because Ethereum also has made a pretty important move here. Some old drawings from this chart, but you can see how Ethereum has been trying to break out just over the weekend, and we're seeing it move higher. So this is, again, maybe signaling there might be some risk on, which also means that the dollar may be putting in a significant high this last week, but this week we'll need a few more confirmations just to feel good about it. Now, a few things that I need to make sure that I mention that are happening this week. We have Canadian CPI data, so keep that in mind when you're dealing with the dollar Canadian. We're going to probably find out if this is a significant high or not after that CPI data that comes in on Wednesday. We have the ECB on Thursday. We have the Bank of Japan also Thursday morning, Wednesday night. We have PMIs that are coming out throughout Europe and throughout the US on Friday. I also meant to mention in the UK we have retail sales data. And something that we've mentioned here on the week ahead video over the course of the last several months and pretty much this entire year is data does matter. Data matters a lot because everybody's trying to figure out how hawkish or dovish a central bank is going to be and how aggressive that a central bank will be moving up rates to keep up with inflation or not. So because of that, we're going to be paying attention to every data point, and every data point does matter and it can move the markets. And that's why volatility is increasing, because what moves currencies and what moves the markets? Interest rates. And as interest rates are aggressively moving higher, and if expectations start to come down, that's going to influence how the markets react, and that's going to bring in more volatility. And this is exactly what we want as traders. So there's no better place to be than with the Forex analytics community each and every day. So make sure you join our free shows that we have every week, every day, excuse me. My name is Blake Morrow. Thank you for spending your time with me this weekend. I hope you have a great remainder of your weekend. I'll see you on the F.A.C.E show Monday morning. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.